Hey guys, welcome to this week's market review. Now again, we've had a positive week, and that's coming off the strong economic data that we saw released on Friday night, with non-farm payroll coming in stronger than expected. That has given the market a really nice boost over the last couple of days. But the market is still in that high risk, high volatile zone, so it's still time to be cautious. However, the strong economic data that we're seeing week in and week out of the US market is what's keeping the market pushing higher and higher. And although at the current levels there is a risk of a slight pullback, it'll be nothing more than some profit taking, so it'll be nothing to really worry about. That's why it's so important to understand the core economic data, because that data is what tells us whether the markets are solid or if there's a reason to panic. Now this week I also want to address a question that I constantly get asked. People say to me that it's been 7 to 10 years since the last market crash, and aren't we due one? Well, the thing about market crashes is they don't happen like clockwork, and the current economic data that we're seeing coming out of the US does not support a crash. I think we still have several years before we see any weakness in the US economy. So when people ask me about the next market crash, I tell them to ignore what they see in the media and instead focus on the core fundamentals that are freely available to determine whether a crash is coming or not. That's why it's important to understand how to read the market. And in my training, we cover that from start to finish. That's all I have for this week. Thanks for watching, and I'll see you again soon.